Seagate has become one of the most talked about technology stocks in recent months. Its share price has climbed more than 110% this year alone and 20% in just the last month. At the time of this recording, it trades at an all-time high of around $174 per share. This raises two important questions for investors. Why has Seagate's stock price surged so dramatically, and is it still a good buy at these levels? To answer these questions, we'll first look at Seagate's company overview and the business model, and then dive into its financial performance, growth drivers, technological edge, and the role of AI in shaping its future. We'll also examine risks, valuation metrics, and conclude with whether investors should consider buying the stock now. Seagate Technology is a global leader in data storage technology. The company is best known for its hard disk drives or HDDs, which make up about 93% of its revenue. It also produces solid-state drives or the SSDs and external storage products, but these contribute far less to overall sales. The core of Seagate's business revolves around high-capacity HDDs designed for cloud providers and large enterprises. These customers account for nearly 3/4 of Seagate's revenue. The company has moved away from its older consumer-focused lines and is now firmly positioned as a supplier to hyperscalers and enterprise clients. One of Seagate's key strategic moves is its build-to-order or BTO model. Instead of producing large quantities of drives and pushing them into the market, Seagate works directly with cloud service providers to build drives according to demand. This ensures predictable supply for customers and prevents the boom and bust cycles that plagued the HDD industry in the past. The company also relies on tight cost control and vertical integration. This means it manufactures most of the key components in-house. This gives Seagate better expense management and helps protect margins. Beyond its core HDD business, Seagate is exploring areas like Levy storage systems and storage as a service, though these remain small parts of the business today. The backdrop for Seagate's growth is the explosive rise of data. Every day, businesses, governments, and individuals generate massive amounts of information that must be stored and processed. Several key trends are driving demand for Seagate's solutions. First is the artificial intelligence boom. Global investment in AI infrastructure is projected to reach $7 trillion by 2030. And training AI models requires huge volumes of data. This data has to be stored, often for long periods, creating strong demand for mass capacity drives. Second, hyperscale cloud service providers such as Amazon, Microsoft, and Google continue to pour billions into data centers. Over 90% of cloud storage is on HDDs because they are far cheaper per terabyte than SSDs. Often more than 6 times cheaper. This cost advantage makes HDDs the preferred solution for storing petabytes and exabytes of data. Third, workloads are becoming more diverse. Many cloud companies use a tiered storage system where HDDs serve both as bulk storage and as caching layers. This allows them to optimize efficiency and reduce costs. Fourth, the rise of edge data centers is creating another growth driver. Data generated by video, factory operations, and safety applications must be stored locally for AI inference and analysis. These edge applications often replicate and retain data longer, which boosts HDD demand. Fifth, data sovereignty regulations around the world are pushing companies to store data locally. HDDs, with their efficiency and cost advantages, play a crucial role in helping firms comply with these rules. Finally, the market outlook for HDDs remains strong. The global HDD market was worth $61.5 billion in 2024 and is expected to grow at a 5.2% annual rate to reach $92.2 billion by 2032. The broader next-generation storage market is forecast to grow at an even faster 17.2% CAGR, reaching $774 billion by 2032. Seagate expects exabyte shipments to grow in the mid-20s annually, which positions it well for continued expansion. Seagate's financial performance has been nothing short of impressive. The company closed fiscal year 2025 with robust results. Revenue in quarter 4 of fiscal year 2025 came in at 2.44 billion, up 30% year over year and 13% sequentially. For the full fiscal year, revenue jumped almost 40% to 9.1 billion, a figure that outpaced industry averages. Mass capacity storage revenue alone reached more than $2 billion in quarter 4, growing 40% year over year. Margins also expanded significantly. Non-GAAP gross margin in quarter 4 hit 37.9%, up 170 basis points sequentially, but 700 basis points from the last year. For the full year, margins improved to 35.8% compared to 25.5% in FY24. This was the 9th straight quarter of margin improvement. Operating profitability improved dramatically. Non-GAAP operating margin reached 26.2% in quarter 4 FY25, near historic highs. Operating profit for the year more than tripled to 2.1 billion. Earnings per share or EPS showed an even bigger jump. Non-GAAP EPS was $2.59 in quarter 4, 2.5 times higher than the prior year. For FY25, EPS reached $8.1, up from just $1.28 in FY24. Free cash flow nearly doubled in quarter 4 to $425 million, and management expects further growth in the second half of 2025. Seagate also reduced its debt by around $150 million in quarter 4 and lowered its net leverage ratio to 1.8x. The company has not forgotten shareholders. In quarter 4, it returned $153 million in dividends and distributed nearly 75% of the annual free cash flow to investors. It also plans to resume share buybacks in FY26. Looking ahead, Seagate forecasts quarter 1 FY26 revenue around $2.5 billion, up 15% year over year, with EPS projected at $2.3. Management expects margins to continue improving into the mid to high 20% range. The dramatic rise in Seagate stock price can be explained by 4 major factors. First, the company delivered exceptional financial performance. Revenue grew almost 40% in FY25, gross margins reached record highs, and EPS expanded more than 6-fold from the prior year. Investors view this as one of the Seagate's most profitable years ever. Second, the AI boom is driving huge demand for data storage. Hyperscalers rely on HDDs for cost efficiency. Seagate's build-to-order strategy has ensured that its nearline HDD production capacity is booked well into 2026. Third, Seagate has achieved technological leadership through HAMR. We'll talk about HAMR a little later in the video. In early 2025, it became the first company to introduce 36 terabyte HAMR-based HDDs, putting it 2 years ahead of Western Digital, its main competitor. These drives are not only higher capacity but also more energy efficient, making them well suited for AI workloads. Fourth, the company has built a shareholder-friendly business model with dividends, planned buybacks, and a stable build-to-order strategy that reduces volatility. Investors view this as a sign of confidence in future growth. Despite the stock's rally, Seagate's valuation remains a subject of debate. On the bullish side, at the time of this video recording, Seagate trades at a forward PE of 16.3, which is nearly 31% below the industry average of 23.6 and cheaper than S&P 500's average of 23. Its EV to EBIT ratio of 13.6 is also well below the sector average of 19.7. The company's PEG ratio is very low, 0.07 on GAAP and 0.77 on non-GAAP, suggesting that profit growth is much faster than what the market is pricing in. Some analysts even project a price target of $250, implying another 50% upside over the next 2 years. On the cautious side, critics argue that Seagate's valuation already reflects much of the optimism. Its price to sales and price to earnings multiples are above historical averages for Seagate. Compared to Western Digital, Seagate looks overvalued as WDZ or Western Digital currently generates higher revenue and margins. Some analysts have price targets as low as $173, which implies only marginal upside from the current levels. Seagate's secret weapon is something called heat assisted magnetic recording, or HAMR. This technology took over a decade to develop, but it's now giving them a massive competitive advantage. In Jan 2025, Seagate became the first company to ship 36 terabyte HAMR drives to market. Their closest competitor, Western Digital, won't have similar drives until 2027. That's a 2-year head start in a rapidly growing market. HAMR drives aren't just bigger, they're also more energy efficient. This matters enormously for data centers that pay massive electricity bills. Better efficiency means lower operating costs for customers and higher margins for Seagate. The company has an aggressive roadmap. Their Mosaic 4 Plus drives supporting up to 44 terabyte are entering qualification now. By 2028, they plan to demonstrate 10 TB per disk technology in the lab. This technological leadership should keep them ahead of competitors for years. Its build-to-order model further strengthens its position by providing predictable supply and reducing the risks of price wars. The focus on high-capacity enterprise drives ensures Seagate plays in the most profitable segment of the storage industry. By contrast, its competitors compete more heavily in consumer and lower capacity segments, where margins are thinner. However, the market is essentially a duopoly between Seagate and Western Digital, with Toshiba as a smaller player. Western Digital still outperforms Seagate in some product categories such as average drive capacity and overall market share in certain quarters. This underscores the intensity of competition. Seagate is uniquely positioned to benefit from AI. Generative AI models require storing petabytes of training data, and HDDs are the cheapest solution. More than 90% of cloud data is already stored on HDDs, and Seagate's HAMR drives offer even greater capacity at lower energy consumption. AI workloads extend beyond the cloud. At the edge, factories, hospitals, and autonomous vehicles generate vast amounts of video and sensor data. Instead of being discarded, this data is now being retained for AI inferencing. This increases demand for localized storage solutions where Seagate's products excel. Seagate's drives also fit into tiered storage systems used by hyperscalers. These systems use HDDs for bulk storage and for frequently accessed layers, optimizing total cost of ownership. Lastly, the rise of data sovereignty regulations adds another tailwind as governments and enterprises need to ensure AI data to be stored locally. Looking ahead, Seagate sees strong momentum continuing into FY26 and beyond. Management expects sequential revenue and profit growth throughout 2025 and into 2026. The volume ramp of Mosaic 3 Plus HAMR drives and upcoming qualifications for the Mosaic 4 Plus platform with global cloud providers will open new opportunities. The 4 TB per disk platform supports capacities up to 44 terabyte, ideal for both cloud and edge workloads. Seagate's roadmap extends well into the future with 5 terabyte per disk targeted for 2028. This ensures it remains ahead in areal density and maintains its cost advantage. Seasonality in business is also diminishing, leading to steadier results across quarters. The build-to-order or BTO model provides long-term demand visibility with most of its nearline production capacity already booked through mid-2026. Seagate is also diversifying into markets like video surveillance, adding resilience to its AI-driven demand profile. On the financial side, stronger free cash flow and reduced debt will allow the company to resume its $1.9 billion share repurchase program while maintaining its 72 cents quarterly dividend. Despite its strengths, Seagate faces several risks. The storage industry is cyclical. In 2022 and 23, Seagate's revenue fell almost 37% in a single year due to a slowdown in hyperscaler spending. Similar downturns could occur again. The company still carries around $5 billion in debt, which adds balance sheet risk. Significant maturities after FY28 could pressure cash flows. Competition is fierce, particularly from Western Digital, which continues to innovate and sometimes leads in average drive capacity. There is also the risk that flash memory costs decline faster than expected, making SSDs more competitive against HDDs. Although HDDs will likely remain cheaper for mass storage, flash adoption could eat into long-term demand. Technology execution is another challenge. Scaling HAMR technology is complex, and any delays could weaken Seagate's competitive advantage. Finally, macro risks like the new global minimum tax starting in FY26 will raise the company's tax burden. There is also a chance that AI investment cools down if companies start focusing more on returns rather than rapid infrastructure expansion. So, is Seagate worth buying at today's prices? The bullish case is strong. Seagate just posted one of the best years in its history, with revenue up nearly 40%, record margins, and EPS jumping more than six-fold. It has reduced debt, boosted cash flow, and remains committed to returning capital through dividends and buyback. Strategically, Seagate is in sweet spot of AI boom. Its HAMR leadership, cost-effective HDDs, and build-to-order model provide visibility into future demand that few tech companies can match. Valuation-wise, even after the rally, Seagate trades at a discount to peers on key metrics like forward PE and EV/EBIT, suggesting the market has not fully priced in its growth potential. The risks are real, especially the cyclicality of the storage market and potential competition from flash technologies. But Seagate's long-term roadmap, financial discipline, and competitive advantage give it a solid cushion against these challenges. For long-term investors, Seagate remains a compelling opportunity. While short-term upside may be limited after such a sharp rally, the company's positioning in the AI-driven data explosion makes it a strong candidate for portfolios looking to benefit from the digital future. Thanks for watching. Have a great day.